I just gave you the briefing of how to do the admission of a partner. Pro forma I showed you, right? I'm sharing the document. This is the pro forma. We prepare the evaluation account, and from the information, debit side increase of liabilities and decrease of assets, and credit side increase of assets, decrease of liabilities will take the difference. Will carry it forward to the old partners, right? And this is the partners capital account. What all comes in, and then we after this we prepare the new balance sheet, right? Now I would like to say. The same thing we'll discuss with the help of an example that I'll share you. This document is visible to you all. Is this partnership accounts calculation of new profit sharing ratio visible? Please
Yes, ma'am.
respond, ma'am. Right. Now, in the
Yes, madam.
question, you will be given, yeah, in the question, you will be given like this, a old balance sheet. See this problem? Given below is the balance sheet of A and B who are carrying on partnership business on 31st December 2019. A and B share profits and losses in the ratio of 2:1. So this is a simple maximum you get this kind of one only. AB share profits and losses in the ratio of 2:1. Remember, this is the A and B's profit sharing ratio, and the balance sheet on the 31st December 2019 was this. Okay, liabilities are given, and also assets are given. Then A and B's capitals are given, and some additional information given about admission of a partner. See, a new partner is admitted into the partnership form, and on his admission, some admission adjustments were made. What are they? First, for C, as a new partner, has to bring his capital 1 lakh and 60,000 his share of goodwill, and he is going to get a 1/4 share of profits. Okay, this is relating to the new partner. New partner capital 1 lakh, goodwill 60,000, and he is getting a share of 1/4. Now, revaluation means assets and liabilities on the admission of a partner, they are revalued. Like how plant, they after revaluing, they appreciated the value by 1,20,000. Means already plant in the books. This is called old. The in the books showing 1 lakh, but by revaluing it came to 1,20,000. So the value of plant increased or decreased? In balance sheet, plant was showing 1 lakh, but when they revalued, it appreciated at 1,20,000. So is the plant value increased or decreased?
Decrease, ma'am.
Increase.
Increased. What extent? What extent it increased? What is the value
Plant
of plant?
1 lakh.
1 lakh. By now, but when they revalued again, how much it came?
1,20,000.
1 lakh 20. So how much it increased? What is the
20,000.
difference? Very good. 20,000 increased. Okay. So which side will increase of assets to be taken in revaluation account? Credit side. Okay. I'll tell. Next, buildings. What did he say? Buildings also increased by 2%. Here, instead of value directly, he said 2%. So whatever the value of buildings, upon this value of buildings, we should calculate the 2%. Whatever you get, that 2% is to be taken as the appreciated value. So 1,50,000 into 2% if you get, you will get 3,000. 3,000 is the building's appreciated value. Okay, that has to be taken. Next, next one is given stock is found overvalued by 4,000. So stock they took 4,000, means more than, overvalued means more than the required. What are the stock value actually showing? 40,000. But what he is saying, it is overvalued by 4,000, means extra 4,000 they took. So that means you should add or less?
Add.
Less. You should less, because stock in books showing 40,000. But what he is saying, it is overvalued by 4,000, means they took 4,000 extra. here it was said stock is found overvalued. Overvalued means took extra value. Okay, overvalued means they took extra. Stock is found overvalued by 4,000. This is appreciated is you may get a ma'am. Appreciated means increased. Okay, overvalued is found overvalued. Stock means they took extra. While valuation they took extra by wrong. So from that 4,000 to be decreased. Okay, decrease of stock. Okay. Next, provision for bad debts 5% on debtors. Provision for bad debts is always a loss to the firm, which decreases the amount to be received by the firm from the debtor. Okay, okay. If say for example, from your debtor, that is from your customer who borrowed from you, has to pay 50,000 to you. Okay, but you are doubtful. He pay 40 to 50,000 entirely. He may come and ask you to reduce some amount because he has some problems. So that is loss only now. So provision for bad debts 5% to be created on debtors means it is a loss to the firm which decreases the value of debtors. So it has also to be taken on the debit side. See what is the debtors? 60,000. Upon this data 60,000, you should calculate 5%. If you calculate again here also you get 3,000. So 3,000 is decrease in the value of debtors. Okay, remember one by one. Okay, next creditors were unrecorded to the extent of 1,000 means not recorded. Unrecorded means not recorded. Creditors not recorded. So whatever the amount not recorded, that to that extent we should add back. Okay, that means your creditors means which side you have? Creditors which side you have? On liability side. Your voice is not clear here. Yeah. Okay. Creditors is on liability side. So you are supposed to not recorded means your liability increased. Okay. So second, third, fourth, and five. These 4 points are relating to revaluation and reassessment of assets and liabilities. So that has to be shown in the revaluation account based on the rule that I gave. Once you complete the revaluation account, we move on to the capital accounts of the partners. Okay, shall we do? See here. Now coming to the calculation of new profit sharing ratio. What is A and B share ratio? 2 is to 1. And what is the share C is getting 1/4. So when this simple way is given, let that it be 2 is to 1 is to 1 only. 2 is to 1 is to 1 only. And sacrificing ratio, we need sacrificing because see, new partner is bringing goodwill, right? In the partner's capital account we are supposed to show goodwill also of the new partner amount. So goodwill he is bringing. Who will take this goodwill? Old partners. In what ratio? Sacrificing ratio. So that sacrificing ratio actually we are supposed to calculate, but I am giving you a simple tip. When in examination the share profit sharing ratio of old partner and new partner is given this much simple. Are you understanding? When profit sharing ratio of old partners and new partner is given in this simple way, whatever the old ratio is there, that itself becomes the sacrificing ratio. The old ratio itself becomes sacrificing ratio. Remember, this is the easiest and simplest way. Okay, did you understood? Shall I repeat? Come on, fast. We have less time. Are you all there?
Yes, madam.
My screen is not sharing. Sharing now? Right. So let us see. Now next one is that calculation of new goodwill. What is the goodwill that new partner brought? 60,000. This is goodwill of new partner to be shared by the A and B. In what ratio? In sacrificing ratio. Here in this particular question, old ratio itself is the sacrificing ratio. 2 is to 1. Means if the total share is 3, A is taking, means 2 plus 1 is 3, right? A is taking 2 parts, B is taking 1 part only. So 2 by 3, 1 by 3. That is how you are supposed to calculate. Let us see here. See, distribution of goodwill. A and B's share is 2 is to 1. C's new share is 1/4. And C's goodwill is 60,000. Now this C's goodwill to be 60,000 of C goodwill to be distributed among the A and B in sacrificing ratio. As I mentioned in this question, old ratio itself is the sacrificing ratio. You need not to calculate. When the question was given this simple in the exam. Okay. So 60,000 into 2 by 3. If you do, you will get 20,000. 20 into 2 is 40,000. A share of goodwill is 40,000 and B share of goodwill is 20,000. Did you understood how I calculated? Whatever the goodwill of the new partner is there, that has to be distributed among old partners in the sacrificing ratio. Okay, 2 is to 1 means 2 plus 3. Sorry, 2 plus 1 equals to 3. So that means A is taking 2 by 3, B is taking 1 by 3. So 60,000 into 2 by 3, 60,000 into 1 by 3. If you do, you will get these values of 40,000 and 20,000. Understood?
Yes, ma'am.
Yeah,
Ma'am, kindly share this admission of a partner
sure.
file.
I'll share. Yeah, I'll share. I'll share. I'll share.
Thank you, ma'am.
Don't worry. Yeah, these are the journal entries. Generally, for you, only journal entries may be asked for short answer, but in long answer, journal entries won't be asked. Directly preparing the revaluation account and partners capital account. So let us see. So, any of you are written these adjustments in your notebook? See, what is the plant? Plant is increased or decreased? Plant increased
Increase
or increased? How much?
20,000.
20,000.
Very good. And then buildings
3,000.
increased or decreased?
Increased, ma'am.
Very good.
Increased
Increased. How much?
3,000.
3,000.
Very
That's
good.
2%.
Stock?
2% 3,000.
Yeah, very good. 2% on 1,50,000 is 3,000. Very good. Stock decreased or increased?
Decreased.
Decreased.
Decreased, ma'am.
Very good. Very good.
Overvalue.
And provision for bad debts means increase or decrease we should take?
Decreased.
Very good.
Decreased,
Creditors
ma'am.
unrecorded in the sense? Creditors
Increase.
unrecorded
Increase.
increase of liability.
Okay.
Okay. Huh. Now
Yes.
you remember this? So I'll show you the revaluation account. See, what is our rule for preparing the revaluation? This is our rule for preparing the revaluation. You are supposed to remember. If any liability is increasing, debit side. If any asset is decreasing, debit side. Vice versa. Increase of asset, yes, ma'am. Increase of asset and decrease of liability on credit side. So, as per our given example, plant increased by 20,000, buildings increased by 2% means 3,000. Okay, and
Yes.
stock decreased by 4,000 and debtors decreased by 3,000 at 5% and unrecorded creditors 1,000. So these are the adjustments given to us in the question relating to the assets and liabilities. So when you total the debit and credit, the debit total you are getting is 8,000 and the credit total you are getting is 23,000.
20.
That means credit is more than the debit by how much? 23,000 minus 8,000. How much?
15,000.
15,000. So who will take this 15,000?
A and B.
A and B. That is old partners only. That 15,000 shared by old partners only. How do they take this 10,000, 5,000? How we divided this 10 and 5? This
As a
2 is to
15,000.
1.
ratio.
2
Very
is
Two
good.
to
is to
1
1.
ratio.
Divided it in the 2 is to 1 ratio. Okay. Uh, okay. So partners capital A and B only will take the difference amount in their old ratio, that is 2 is to 1. Now we completed the revaluation. Now next step is moving on to partners capital account. Partners capital account, the very first thing you're supposed to do is balance brought on. Which of these is given to you in the question on liability side? If you see here, see in question liability side, A is capital, B is capital, 1 lakh 80, 1 lakh 50 is there. So that we take as it is here. On opposite side, credit side, by balance brought down 1 lakh 80, 1 lakh 50. Next, C also brought capital, right? Total how much capital he brought? Keep 1 lakh
60.
capital plus goodwill. Total he brought 1 lakh 60,000. The bank, he deposited through bank, he brought 1 lakh as capital and 60,000 as goodwill. So 1 lakh 60,000. Next, whatever is there, reserve. See, general reserve is there now. These are accumulated profits, general reserve, profit and loss, whatever are there. That, so this general reserve 6,000 means the some of the profits they kept aside amount. So general reserve is nothing but a certain amount kept aside for the future use. So his new one is coming now. So now the existing partners will take back. Yeah, he's coming. Let us start a new. So whatever all the there we will share like that. The general reserve whatever is there, that 6,000 again shared by the partners in their old rate. General reserve only old partners in their old ratio. Okay. Next, here by preparing the revaluation account, we distributed the difference amount to partners, right? It is on debit side, so it should be taken on the credit side, opposite side. Are you understanding?
Yes, ma'am.
And where from you are taking from revaluation. So here you should write revaluation, and here in revaluation AB are on debit side. So in partners capital account, credit side will take that amount by writing, and we are taking it from the revaluation. So we will write revaluation account. After that, what is this C's capital? C's capital is nothing but the goodwill that we distributed. Okay, the goodwill that is distributed among partners by from C's capital amount. Okay, this is the C's capital means this 40,000 and 20,000, there's A and B are getting from C in the form of goodwill. Okay, so that's how debit is sorry, credit part of the partner. See, each of these values are increasing the partner's capital balance. So remember, any of the transaction that increases the partner's capital balance will take on the credit side. Any of the transaction that decreases the partner's capital balance will take it on the debit side. And now look at here, P&L account. See, in the question it was given, which side given? P&L account on asset side, means right hand side. So in the partners capital account, debit side, like left hand side we will take. Are you understanding? Opposite sides. Okay, P&L account is given on the asset side, that is right hand side of balance sheet. So in partners capital account we should take on the debit side, that is left hand side of the partners. So in what ratio? Equal old ratio. Okay, and now what is left? Yeah, what is this? So actually C brought 1 lakh 60. In that he gave 60,000 to A and B now. So as that he gave to A and B, he should write now. So C's capital balance is decreasing by 60,000. Why? He gave to the A and B in the form of good deal. So in C's capital account debit side, we'll write 60,000. And where it gone? If you put a question, it gone to A and B's capital account. So here we'll write A and B. Why? In brackets you can write goodwill. As my storage is full, I cannot enter a single line, single letter. Understood this? Till here you understood?
Yes, madam.
Yeah. Again, now A's credit total and A's debit total, fine. The difference amount is going to be balance carried down. Means this is the new balance of capitals of the old partners by the time of admission of a new partner after all adjustments. Okay, so whatever you get this, like same for a B, you should take the debit and credit totals and find the difference, put the difference amount on the side where it is falling less. Okay, by writing balance carried on. And for C also admitted by this date. It's a new balance sheet. So new partners capital account. So whatever the balance carried on you got, that has to be taken in the balance sheet. In between, we need to prepare the bank account also. Why? Bank balance also will change. Why? See in the question, bank is how much? Cash at bank 40,000. Okay, 40,000 already. Bank, remember, bank is an asset. Assets always shows balance brought down on debit side. Okay, balance brought down as we always show on the debit side for asset account. So bank is an asset, so we show the balance brought down on the 40,000 debit side. Apart from that, C also brought. Here we wrote now. See what we wrote in C's capital account, bank 1 lakh 60 credit side we got. So in bank account debit side, where it is, in bank account debit side C's capital 1 lakh 60 will come. Are you understanding? Opposite sides we are taking. Are you understanding?
Yes.
Yeah, bank we wrote on a credit side of C's capital. Now when you open that bank account, debit side of bank account C's capital you should write 1 lakh 60. So what is the total now? 2 lakh. As credit side nothing is there, balance cleared on 2 lakhs and close the account. 2 lakhs, 2 lakhs. Understood? So bank
Yes.
balance changed. Now balance sheet. In balance sheet, see what are all changed from the old one. Is there any change in the bills payable?
No.
Nothing we mentioned, no change. Is there any change in the creditors?
Yes.
Very good. Yes. See, in revaluation account, whatever you are taken liabilities on the debit side, add. If liabilities you are taken on the credit side, subtract. Opposite. In revaluation account, whatever the assets you are taken on debit side, subtract. Whatever the assets you are taken on the credit side, add. Ulta. Are you understanding?
Explain me
I'll
again,
write.
please, ma'am.
I'll write once again. Yeah, this won't means I can't write on this. I'll repeat once again. I'll tell. See, creditors increased. So which side we took? Debit side. Means in
Debit side.
revaluation account, liability increased and we took it on the debit side of revaluation account. So when you are taking the creditors in the new balance sheet, you should add. Understood?
Okay, debit side will be added in liability.
Liability. Uh, Liabilities on debit side of revaluation account to be added in new balance sheet. Got it?
Yes.
Yeah. Now, next thing is, what is this in the question balance sheet? Outstanding expenses. Is there any change in the outstanding expenses?
Mm.
No change. So we take this as it is in the new balance sheet. Where is the new balance sheet? Uh, Outstanding expenses as it is we took. See, from old to new. Whatever are changed, that we either changed value or we don't take. Next, what is there in the new balance sheet? General reserve. General reserve. Have we took it anywhere?
In revaluation.
No, no. In capital account of partners, we took. See, general reserve. We already took it in the capital account of the partners. So it will not come in the new balance sheet. Remember, balance sheet items as it is will come only one time. So general reserve, the 6,000 we already took in the capital account of the partners. So we should not take it again in the new balance sheet. Did you got it? Whatever you are taken from the old balance sheet to partners capital account will not come. Next, capitals. Capitals, do we take this? Do we take these capital balances in the new balance sheet? General assumption, tell me, no problem. Even if you say wrong, nothing happen. Do we take capital balances from the old balance sheet? The same balances from old balance sheet to new balance sheet? No, we should not take, because we did the changes here, right? We already took the world balances from the balance sheet. We took the capitals of partners in the new, in the partner capital account, and their capitals has been changed. Some adjustment we made. So new capital balances of partners to be taken. Are you getting? I'll repeat
Yes.
once again. From the question balance sheet, partners' capitals not to be taken directly in the new balance sheet. Why? Because those capital balances we already took in the capital account, and to these balances we made some adjustments, right? Some adjustments were made. So after those adjustments, new, whatever the new balance you got, these balances will be taken in the new balance sheet. Understood now?
Yes.
That to be taken here. And from the question balance sheet capitals, where we take? In the capital accounts we take. Question balance sheet capital amounts will take in the capital account. Okay? So now liability is over. Coming to the assets. Cash in hand. Is there any change?
No
Do
change.
we come across about cash in hand anywhere? No,
No
no
change.
change. So it as it is taken in the, very good. We take it as it is in the new balance sheet. Okay. Now the next item is what? Cash at bank. Is there any change in the cash at bank?
No. Bank account we were
Change. Yes.
taking
The bank account now. So what is the new balance of cash account here? This
2
one.
lakh.
Well, let's replace 2 lakhs. So we should take the new balance of. See, in the admission of a partner, compulsorily bank account means cash at bank or bank amount will change. Remember that. So you cannot take directly the question balance sheet value. Okay, when you are doing admissions of a partner, this bank balance of a balance sheet will change. To the bank balance of the balance sheet, you should add capital and goodwill of the new partner, and it should show. Understood? So that is how we show the cash at bank 2 lakhs. Got it?
Yes.
Next. Next. Next, what is given? Datas. Can we take datas directly?
No. Provision of data is
No.
there.
Very good. It has a, where we took the datas in revaluation? Debit side. Debit side, we take the PBD datas. That means decrease of assets. So when you are taking the datas, what you should do? You should minus. Understood? From the datas in revaluation account, debit side, whatever the amount you are taken, that value has to be subtracted. Understood?
Yes.
Hmm. Next. Next, what is there in the balance sheet? Stock. What is the value of stock? 40,000. Can we take directly the stock amount?
No. Some
Can
expense.
we take 40,000 directly? No. No. What we should do to that stock? Increase, add or subtract in new balance sheet to the stock. Which side stock in a revaluation is appearing?
Credit side.
Stock in revaluation is appearing on debit side. So we should subtract. So stock minus depreciation, whatever overvalued, whatever he give. You are supposed to subtract. Got it? Now the next one is plant. Can we take the plant account amount directly in the new balance sheet?
No. Appreciation is there.
Yes. Again, for the plant, there is an adjustment. So, which side now plant adjustment in revaluation account?
Credit side.
Credit side means increase of asset. So, this credit side value, whatever you have taken, that has to be added to the plant and showed. See, this is the plant from the old balance sheet, and this is the appreciation of 20,000 from the revaluation account and total 1 lakh 20. Understood?
Yes, madam.
Similarly, balance sheet, or again question balance sheet, buildings of 1 lakh 50. Can we take directly buildings 1 lakh 50?
No, appreciation is there.
No. Again, for buildings in revaluation, debit side was given, that means increase of asset. So when you are taking buildings in new balance sheet, first take the question balance sheet value of buildings, then revaluation amount of buildings. It is in revaluation account, buildings are on credit side. So here add we add the amount of revaluation, and total amount will show here. Okay, see, for plan for debtors, PBD, if debtors old question balance value we took, and as the debtors related adjustment is revaluation account debit side, so we subtracted. Even for the stock we took question balance value, and stock related adjustment is on the debit side of revaluation account, we subtracted. Understood? So in
Yes.
revaluation account, any asset value is on debit side, that to be subtracted. Any asset information on the credit side of revaluation that to be added. Got it? Now what is left in the balance sheet? P&L account. Can we take this P&L account in the new balance sheet?
Already we took.
Can we take P&L account in new balance sheet? Yes or no?
No. No, ma'am.
No. Very good. Why no?
Already we took.
Very good. We already took it in the partner's capital account one time. So balance sheet items only one time. Okay. So we already took P&L account. It's a P&L account in balance sheet on right hand side. So in partner's capital account, we took it on the left hand side, opposite direction. Okay. So once like that, everything from the old question balance sheet, according to the necessary adjustments, after taking that, you are supposed to total your assets and your liabilities. Both the balances are tallied means what you did is correct. Understood?
Yes, madam. Yes.
This is for your class only. Advanced accounts, admission of partner, page 147. Material solution. This is the other one. Second question. Why this change it like this? Last batches I thought, no, that's what is showing. Okay. Shall we do? Did you understood this?
Yes, ma'am.
After this, actually this would have been completed in the previous class, so that I would have taught you retirement. And what else we have after partnership? That installment and hire purchase is also there now. Do you have installment and hire purchase?
Yes, ma'am, we have.
Installment, hire purchase, bank, bank accounts, next. Right. 1 second. Let me see. Departmental stores is easy. Departmental stores. See, departmental stores, no, departmental accounts. Just uh, what you people do practice is admission of a partner topic. Okay, I'll share you this document. How many are there? Yes, good number of questions are there. But in this, you also have a retirement, dissolution, everything. So what you do next time class, you please take the printouts. Okay, we will do retirement and retirement or death of a partner and dissolution of the firm also. So that you will it'll be easy. Okay. Do we have one more class? No response. Okay, I'm sending the link of my this document. Okay, this document link you people can download, take the printouts, and can go through. In previous class, I gave you the pro forma of a admission of a partner, how to do revaluation account, how to do partners capital account, bank account, and balance sheet, right? So from using that information with the help of one question, we did it today, right? Same way for retirement and death of the partner, and also dissolution of the firm or questions also there in this document. You people can go through. We'll refer that again in next class. By the time, now I'll share one more. So you don't get confused now. If I take the departmental accounts, that again is a simple topic. That's so I want to cover that topic in today's class.
Yes, ma'am.
Yeah, it's just so simple.
Madam,
Ma'am,
Ma.
any important questions for theory?
Theory important questions. Okay, I'll mark. Okay, we have one more class now.
Yes, ma'am.
You all, I saw you all are worried so much about your exams. For your exams, for accountancy exam, this advanced accounting exam, if you want any additional class guidance, I'm ready. Okay,
madam, please give your number.
my number you don't have. I
No, ma'am.
you
We
you
will
people
add
only
in
made me to
commerce
join
level
in your
best.
group. You asked me to join in your group.
Yes, ma'am.
Okay, I'll give.
Commerce.
See, take this in the departmental accounts. Advantages of departmental accounts, and then how do you this one this particular allocation of various expenses. Where is this? See, allocation of different expenses. It's not showing anything. In departmental accounts. This whatever this are you able to see this line? See allocation of different expenses. How different expenses are allocated department wise has been given here. Like that only based on this only we'll also work out the sums as theory question. This is you can write page number 198. This first star mark is there na from there till
In my
this heading.
textbook, 201 is there, ma'am.
Ah, maybe.
In my reader, 201.
That's why page numbers may change. You remember these pages, these titles. Okay, page
Yes,
number
ma'am.
may vary with your books and my book. So remember the title and this 9.4. Okay, topic number. The next one. This is interdepartmental cost and profit. This also will be there. Hmm. I'll make you work out a problem. Departmental accounts 2. Here you'll get the problems. See, like this, you'll have the departments. I'll just, for time being, I'll just explain with the help of this example. Okay. See here in this, a firm has two departments and trading and profit and loss account. Uh, General profit and loss account of the department firm has been given. Stock for A and B given, purchases for A and B, sales for A and B, carriage inward, salaries, rent. So various expenses, these are common. Of only stock, purchases, sales, department wise given. The rest all are given common amount. Okay, means the total value incurred for both the departments. Okay, and next following further information, closing stock of A and B are given. And after that, what he said, goods transferred from department A to B cost 6,000. That is, I'll explain. Means departmental transfers that. Salaries and general expenses to be allocated equally between two departments. Area occupied by the two departments is in the ratio of 1 is to 2. Insurance premium is comprehensive, allocation being inconvenient. Remember, I'll explain you now. See, in departmental accounts means what? I think many of you have attended Big Bazaar, Lensmart, D Mart. Yes or not?
Yes.
Visited now. So in that you will find different departments.
Yes.
Groceries department, electronics, textile. Okay, costumes. Right? Like the different departments are there. Yes or not?
Yes,
Yes.
ma'am.
So now, see a firm which runs under one roof, different goods. Okay, for each good it is allocating one place, right? Big Bazaar, earlier Big Bazaar also there. Big Bazaar also you might have visited. All groceries one floor, uh, fashion one floor, traveling one floor, electronics one floor, uh, stationery one, like that they allocated, right? Now this big bazaar, take the big bazaar. I think more majority of you visited the big bazaar when it was there. I want yes or not. This is a
Yes.
general topic.
Yes.
Yes.
Yeah, yeah, right. So I'm not sharing the screen. uh, right. Where is it? So the big bazaar itself only owner, say for example, big bazaar owner now want to know which department he is getting good profit, which department is running well, whether the department to be continued or not. He want to know how he will do that, because in one building only he took all the departments and all the staff are working, right? Here and there shifting, right? Can he able to do? Yes, he can
Yes.
able to do. How he can able to do? Say for each department he might have allocated some space in the building. Okay, and for each department some staff he might have appointed, and for each department he using some furniture. For each department he is using current, that is power. Okay, similarly for each department he makes some purchases and department wise sales will go. అవునా? అవుతాయా లేదమ్మా? అవునా? అంటే మీకు ఎగ్జాంపుల్తో చెప్తా. ఒక బజార్, గ్రాసరీస్ డిపార్ట్మెంట్, ఎలక్ట్రానిక్స్ డిపార్ట్మెంట్, స్టేషనరీ డిపార్ట్మెంట్, టెక్స్టైల్ డిపార్ట్మెంట్, ఇలా ఒక 4 డిపార్ట్మెంట్స్ ఉన్నాయి ఒకే బిల్డింగ్లో. మొత్తం బిల్డింగ్ రెంట్ పే చేస్తాడు, కానీ బట్ how much his which department of which floor He's making more profits, he's having more sales. He want to know. Then what, how he can do? He has to divide, he has to find, okay, how much, like for groceries, what is the space I allocated, how many people are working under the groceries, and how much power I use for groceries. Okay, how many purchases I'm making, how many sales out of that I'm making, all these he'll do the calculation. Okay, now you may get it out, madam, how do they do that? One building he's paying rent, yeah, he will, floor area, say for example, total building he's paying 1 lakh, and 4 floors are there, each floor 25,000, can he divide? Yes or not, Emma?
Yes, madam.
Yes.
I want to respond. He is paying, suppose he is paying 1 lakh rent, and there are 4 floors. That means, can he divide 1 lakh by 4? So, floor wise 25,000 he is paying. Can he divide it like that?
Yes.
So, building or this area, how he divided? Based on the space occupied. And next, power. Power for entire building he is getting some 10,000 bill. How he allocate this power again? Tell me. Again, floor wise, how many PowerPoints are there? How much? How many PowerPoints are there? How much he say in groceries? He may be using a refrigerator also, because some refrigerating food items may be there. Okay, in electronics, he may be using some plug points for testing purpose. So first power consumption is more in groceries floor, next electronics floor, later stationery and textile, not much, right? That means based on the power points and the power that power points in the area. Are you understanding?
Yes, ma'am.
Are you understanding? So how we calculate the power? For
Based on
each department, how many power points are there? Based on that. The area we allocate based on the space occupied. Okay, and salaries how we calculate based on number of workers allotted for each department. Okay, so like that, if you see here, allocation of expenses, the first one, see, lighting according to the meter reading or PowerPoint, he will allocate number of PowerPoints. If the meter reading is given that, if each floor, if he keep separate meters, accordingly, if not, PowerPoints. The lighting has to be allotted. And the next, uh, if nothing is given, based on the floor area itself, we are supposed to allocate. Understood this? So how do you allocate the lighting? The for entire building, you get one building. Sorry, one bill. But he wants to know department wise. So how he allocate? Submeters. Submeter he'll keep floor wise and divide it the amount. Otherwise, if you don't have the submeter facility, number of PowerPoints, as I gave the example. Or if we don't have that also, then floor area occupied by each department. So any of these three methods he will adopt to divide the lighting, the expenditure among the departments. Are you clear enough?
Yes.
Next, next, this department, next advertisement. Generally, every store, every firm may give a wide advertisement, spend lot of money. Okay, similarly, Big Bazaar also might have spent lot of money. Okay, so now, but in that Big Bazaar, entire Big Bazaar, one advertisement. But he wants to, in that one advertisement, he will show all his products. But he wants to divide that advertisement cost also department wise. Then how do you divide that? How do you divide that? Based on the sales. Okay, based on the sales he will divide it. Okay, the next, carriage and freight. Carriage and freight means transportation, goods transportation for the according to the purchases of department. Okay. Mm, the next, depreciation. Yeah, depreciation will be given commonly to you in the question. Then how do you divide? Based on the assets of each department, the asset value of each department. While doing, you should remember these all. Each, if, how do you allocate the lighting to department? How do you allocate the carriage and freight to department? How do you allocate the advertisement to each department? What is the basis? The basis of allocation of expense is what you are supposed to remember. I think that notes also there. I'll share you that also. Okay. Mm, then repairs, depreciation, again as I mentioned, every floor, for different departments he might be having a different assets, okay, to keep the things. So the total depreciation amount, he will, based on the asset value, he will apply. Repairs and renewals according to the department wise assets of the department. Manager salary, either that the manager spent the time in each department. Okay. The next, yeah, if the expenditure is relating to you using it, see, you people may not be good in accounts, but you are all almost many of you might have working somewhere or the other place. You have the working knowledge and experience. You all are good in that, majority of you. So use your common sense and understand, is this expenditure relating to the selling and distribution expense, selling and distribution, or office and administration. You using your common sense, if you are able to divide whether it is belong to a selling and distribution related expenditure, or it is belong to a office and administration expenditure, you can easily calculate, you can easily understand on what basis that expenditure to be divided among the departments. Say for example, traveling expenses of a salesman, that can be divided based on the sales of each department, because it is relating to the selling and distribution. Okay. Commission to the salesman, or service expenses, sales service expenses, or discount, or bad debts, whatever are there, all these are related to the sales. So we divide them based on the sales of the each department in the sales ratio. And coming to the office and administration, rent, I said, rent is relating to the office, and so you are supposed to consider the area occupied by each department. So rent of the building to be divided based on the area occupied by each department in the ratio. And now power and fuel. Okay, that power and fuel means whatever, as I mentioned, he used some power in the groceries department and in the electronics department. Now, how to allocate the total bill among these two departments? So, how many hours the departments are working, and how many, what is the hourly rate? This will be given to you in the question. Hours worked into hours per hour, per horsepower. Okay. The next one is, yeah, there are, so rent, power, we allocate based on the area occupied. Other selling expenses, distribution related expenses, whatever there, we allocate based on the sales. And any expenses relating to the purchase, that is carriage, freight, and all, based on the purchases. And depreciation is based on the asset value. Repairs and renewal based on the asset value. Okay. And there are certain expenses which we cannot allocate to any particular department. These are general expenses like income tax, okay, director fee, auditor fee, manager's salary, general manager's salary, okay, office expenses, like that, whatever are there, those expenses are to be taken as general, cannot be allocated, and to be taken on a wholesome, and a, what you call, on a total basis. Understood? Now let us see one sum. You will understand that also. Here it is. Look at this. I'll show you the question. You are supposed to answer me. Based on that solution, I'll show you. See, stock per department, purchases department wise, sales department wise. Uh,
Carriage
Carriage inward. This is to be divided among both the departments based on what?
departments.
Based on departments, among the departments, based on which one? Based on stock, purchase, or sales? Carriage
Carriage
inward
salaries.
divided among departments based on purchases. Okay, based on purchases, because it is relating to the purchase, carriage of purchase. Carriage inward is nothing but carriage on purchases, so relating to the production work for purchases. Salaries, rent and rates. Next one is salaries and rent and rates. See, for salaries he only gave the example. What he said: salaries and general expenses to be allocated equally between the two departments. Because for salaries, we are not provided any information relating to the number of workers, right? If would have been provided, we would have been taught. So salaries, nothing is given, and he gave the instruction to us: divide equally. Understood? So as per the instruction we go. Okay, if any instruction is given, we are supposed to go as per the instruction. Next, rent and rates also given. So rent and rates, what basis you will divide? Rent on what basis? Rent on what basis? Area occupied. Rent means double bedroom, single bedroom. How you are allocating the rent of your building? Based on the size only, na? Based on size only, na? You pay
Yes.
or you receive for your house. So area occupied only, na? It's a single bedroom only. That is the double bedroom only. So we charge more. Do you say or not? Huh?
Yes.
So like the simple ways you should connect yourself with the subject. So rent and taxes, we rent and rates we divide among the departments based on their area occupied. So it is given. See here in the question, fourth point, area occupied by the two departments is 1:2. So
81.
in this ratio that we divide. Understood? Did you got it?
Yes, ma'am.
Next, advertising. Advertising is 8,000. In which ratio we divide between the what is the base for dividing the advertising among the departments?
General expenses.
Based on sales.
Very good, very good. Advertising is relating to the sales. If you give advertisement, your sales will increase. If you don't give advertisement, will sales. So think commonly. Why do we give the advertisement, or why anyone give the advertisement? For improving the sales. So advertising to be allocated based on the sales. So whatever the sales ratio is, departments, in that ratio of sales, advertising expenses has to be divided among the departments. The next, insurance. Insurance, how you divide? He gave. See, again for insurance, he gave the point. Fifth point, if you see,
A value
insurance premium is for comprehensive policy, allocation based inconvenience. So, can we divide the insurance?
No, ma'am.
Oh, we have to take under the total expenditure. Insurance to be taken directly under the total expenditure. We cannot divide it. Next, general expenses. Again, for general expenses, also he gave the information. Third point, along with the salaries, right? Along with salaries, he said general expenses also to be allocated equally. So we don't need to take any base. Next one is discount allowed. So on what you calculate? On what basis? Discount. To whom you give the discount first of all? You give the discount to who?
To buyers.
Buyers. That means our customers. Okay. When do you get the customers? When you sell,
Sales.
right? When you sell only you'll get the customers. When customers buy from us, that means when you sell to your customers only you will give the discount to encourage more purchases from us, right? So discount is related to the sales. So this discount allowed to be allocated based on the sales of the both the departments. Next, carriage outward. Yeah, carriage outward is also relating to the sales. Carriage outward is nothing but carriage on sales. Okay, carriage outward is nothing but carriage on sales. In your second semester, you worked out final accounts. So there you come across of this carriage inward and carriage outward.
We
Okay,
did
so
also.
carriage. Amma?
We did that also,
Yes,
ma'am.
come on.
Carry.
Yeah, you did that also, no? So carriage outward is sales, carriage inward is based on purchases. See
Purchase.
here, first one itself carriage inward. Inward is nothing but purchases. When you purchase, carriage brings the goods into your business. When you sell through carriage, you send the goods outside. Are you okay? Understood that?
Yes.
Next, discount received. You are allowing discount to your customers, and now discount received. From whom you receive the discount? From
Purchase.
whom you receive
From
purchases?
seller.
Means from very good, from the seller. Seller means when you make the purchases. So discount received to be allocated based on what?
Purchases.
Very good. Very good. I love the ఈ మాత్రం proactive గా ఉండండి. You really work with you can score more work. ఈ proactive ఉండి, if you work and practice that day at least one or two problems immediately after the class, you will really score above 70s. I'm telling you people. Next, audit fees. It's a common expenditure. Okay, we cannot divide it. Audit fees. It's a common for the entire organization. Auditor will come and check your books and give the certificate. So you cannot divide it. Okay, so audit fees is a common expenditure. Will take under the total. Next, interest on loan taken and interest on investments. This is also total. Okay. Now, now some idea you got now how to do the allocation.
Yes.
Yes,
Allocation.
ma'am.
Sorry, dear.
Got it, ma'am.
Allocation is based on either based on the sales or purchases or area or lighting plans. Not all. These are the four bases for the allocation: sales, purchases, area, lighting points. These are the four bases for allocation. Sales we take for the sales related all expenses related to the sales, like selling expenses, advertisement, sales commission. Okay, discount allowed. All these based on the sales. We take the basis sales and carriage inward. Okay, or any data creditors related related discounts received, those all based on the purchases. The next area, rent, okay, power, all that based on the what do you call, area
Area.
occupied. And power, electricity and all. If any power points or any information is given accordingly. If nothing is given, based on the area occupied only, power also. And for certain expenses he give how to allocate the instructions according to the instructions we are supposed to give. And certain expenses cannot be divided. A common expenses, director fee, auditor fee, like that, whatever the common expenses are there, that are to be taken directly under the total. We cannot allocate them under any account. This is what a brief knowledge and idea you should have before proceeding to the departmental accounts. Now I'll show you how to present it on the paper. What is the information given to us here? Stock, purchase, sales, and additional information again stock. So this is the closing stock and this is the opening stock, right? So one department, if you take, I'll show you first mine, then I'll show you that uh, presentation. Say for example, if one department is there, trading and profit and loss account, do you know now?
Yes, ma'am.
So that trading and profit and loss account, on debit side, what you will take? In trading and profit and loss account, debit side, what you will take? Opening stock, then purchases. On credit side, right, sales, closing stock. Yes or not? These are the expenses you take.
Yes,
Yes,
ma'am.
ma'am.
This is how you take in trading account. The
Yes,
same thing, what I am doing here, after this, the difference you will get again, your profit and loss account expenses will continue. So, what I do now for department account, because I have so many departments, data is same for each department, right? Data remains same, only values differs. So, what I do in under departmental account, in single department, single organization with single account, we prepare like this above whatever I said. But when you have different departments but want to show different department wise, so department wise, what I do, I'll take a common particulars column. I'll take common particulars column. Okay. Department A, department B, and this is for, and one more also, one total also I should take, because there are some total are there na. This is for total, and this is for debit amounts, and the other one is for credit amounts. Debit amount, other one is for credit amount. Are you getting? Now purchase, opening stock. This is the one method. Or what they do, some people what they do, opening stock, here I'll enter purchases, I'll enter here. I think you're getting time for next class.
ma'am, you explaining from textbooks, na?
Just model, that question I showed you is from textbook only. How to present I'm showing by myself to make you understand.
Okay, ma'am.
Like this they'll show expenses on debit side, incomes on credit side, they'll go on show and they'll make the difference. So this is the one method. The other method is the textbook method is, and most popular method is what they do. Particulars. Basis. On what basis you are dividing the expenditure also you are supposed to show. So first, generally credit will be more than the debit, right? So sales we will take, sales say for example 10,000 department wise. So same question will do, same question will do. Sales in the textbook is how much? Sales 2 lakhs and 3 lakhs. Okay. Oh, so this calling. Sales 2 lakhs and 3 lakhs. Excuse me, children. Yes, sir. Yes, sir. Yes, sir. I'm sorry, children. Is this screen visible? So sales 2 lakhs, department A, department B 3 lakhs. Okay. Then closing stock also you take. What is the closing stock given? Did you got any of you textbook question? Open the textbook. If any of you open the textbook, can you
10,000.
please, Emma?
10,000. 10,000.
10,000 department A and
20,000 department B.
very good. Like that, you just tell me the values. Okay, 10,000 and 20,000. So now add these two, sales and closing stock. Add 2,10,000, and this
3
is
lakhs
2,20,000.
20,000.
3,20,000.
Right? Yeah. Now from this total purchases. Now next purchases. What is the purchases of department A?
1 lakh.
1 lakh opening.
1 lakh. And department B?
1
1
lakh
lakh
50,000.
50,000.
1 lakh.
1 lakh 50,000. Hmm. Now opening stock. Opening stock.
25,000.
Department B.
30,000.
30,000.
So what is this total?
55,000. 1 lakh
So
25,000
1 lakh 25,000
and
1
1
lakh
lakh
80,000.
85,000.
85,000.
80. Now this is total revenue, and this is total expense you should think. Okay. So what is the difference between these two? What is the difference between these two? This is gross profit.
Credit and debit.
Yeah. 1 lakh, 2 lakh 10,000 minus 1 lakh 25,000. Yes.
85.
2 lakh 10,000 minus 1 lakh 25,000 is 85,000. And this is 3 lakh 20 minus 1 lakh 80.
24.
1 lakh 40.
1 lakh 40.
3 lakh 20 minus 1 lakh 80. Got it? This is gross profit. Instead of doing like this for each department, instead of doing like this, we took first revenue items, we added them, and then we took the expenditure item, we added them. From the total of revenue, total of expenditure subtracted, and we got the gross profit of department A and department B. Instead of doing horizontally, we did it vertically because there are two departments. The data is same, values are different. So instead of doing and wasting time like this, we did this way. Did you understood?
Yes, ma'am. But where is the another thing? Like carriage in
Oh,
warehouse.
coming. This here gross profit is over.
Yes.
Gross profit is over. Now let us take expenditures, whatever are there. First one is what? Carriage.
Carriage in warehouse.
Carriage